Yes, students. For example, you are solving a past paper question and you are finding these four items in that scenario. By the way, I have taken these four things from the past paper of FID as well. For example, while going through the scenario, you identify that the company's inventory turnover has decreased. Inventory days has been increased. That is, now the company, for example, 1 year back, inventory days were 70 days and now inventory days are 100 days. It means that inventory is now slow moving inventory. Now, students, first issue is that how come it is an audit risk? If you are calling it an audit risk, then you must have to give it justification as well. You have to tell how it is an audit risk. So, students, we discussed before earlier that audit risk consists of two things. It has two components: risk of material misstatement and detection risk. So, because of this slow moving inventory, tell me what is the likely misstatement in the financial statements? The likely misstatement is that inventory may be overstated. Overstated. How come? Because inventory may not have the same value it used to have before, because it is no longer being demanded in the same quantity being accepted in the market. So the net realizable value, it may be less than cost. So in order to say it's as audit risk, you must have to write the company's inventory days have increased from 70 days to the 100 days, and hence this is the risk that its NRV may be less than cost, and hence inventory may be overstated in the financial statements. Means that you have to relate this risk to the financial statement, that how it is going to affect the financial statement and ultimately audit risk. What does student do? They discuss that inventory is going to be obsolete, it does not have same value, but they don't relate their answer to the financial statement. What will be the impact on financial statement? If you don't explain this thing along with this discussion, you will lose marks over here. Now, another thing over here, student says inventory may be misstated. Instead of writing overstated, here is a clear indication that inventory days are increasing. So it means that when you can predict that it may be overstated, then you have to write it clearly. You cannot generalize it that it is misstated. Examiner says that you have to be specific, you have to be clear. Now, this is the audit risk we have identified. Now, what will be the response to this audit? Auditor's response to this risk. Now, students, listen, one thing, keep in your mind that audit response is not audit procedure. Audit response is general direction of auditor. Now, what the auditor will do? For example, you can say that auditor will check, he will perform work whether the inventory is recorded at lower of cost or NRV or not. This will be the audit response. But you cannot write substantive procedure over here. Moreover, you cannot generalize it just like that, check whether inventory is recorded at correct amount or not. So these two extreme vague responses. What is the vague? The vague response is that you write substantive procedure, which is not acceptable by auditor because it is not a response. It is substantive procedure. The second response is that you just generalize it, that check that inventory is recorded at appropriate amount. Again, it is vague response. You have to be in between the both. You have to tell, check whether inventory has been recorded at lower of cost and NRV or not. That will be the appropriate response, which will give you the full marks. Now, hope you got the answer that of how to explain audit risk and how to respond this risk. Now, let us move forward to the other point, second point. Refurbishment expense. You find this oftenly repair and in the name of repair and maintenance in some of the exam questions. So refurbishment expense, what is the risk because of it? What is the audit risk? Again, risk of misstatement in the financial statements. You have to relate it to that this refurbishment cost that may have been fully capitalized by company and it may not eligible for the capitalization, and hence assets and profits may be overstated. It may be overstated. So students, in this, again you see, I have mentioned here that it may be overstated because if a cost does not eligible for capitalization, it has to be charged to financial statements and profit will be reduced and assets will also reduce. But if they have capitalized all the expense as asset, so it means that they have increased the asset and they have increased the profits of the company. So listen, I am telling you again, you have to relate to the its impact on the financial statements. Then it will be appropriate justification of that you are calling it audit risk. Now, what will be the audit response? You see, audit response to this will be to check whether this refurbishment expense that is eligible for capitalization or not. What we will do, for example, this expense is 5 million. Audit response will be that auditor will take the breakup of this 5 million from the management and will check whether it includes the expenses only eligible for capitalization or not. This will be the response. That he will take breakup of these 5 million and will check the detail of all expenses added to it, whether they are eligible for capitalization as per IAS 16 or not, whether they have actually enhanced the capacity of asset or not. So this will be the appropriate audit response. Students, hope you have got an insight to the topic of audit risk, that how it is going to be tested in the exam and how to address the question. Thank you. Keep watching my videos. Stay blessed.